The top business stories live from the Sky newsroom. A new study claims increased capital gains tax would not stop millionaires investing in the UK. But the Chancellor is facing budget troubles as several government departments missed their deadline for spending settlements. And the betting giant Entain says that the Euros give its business a UK summer boost. A very good morning and welcome to Business Live with me, Darren McCaffrey. Thank you for your company on this Thursday morning. Now, there is some good news for the Chancellor, it seems, this morning, as she wrestles with ways to save apparently £40 billion in the budget. The Institute for Public Policy Research, the IPPR, says that one of her tax-raising options, increasing capital gains tax, will not lead to lower investment, slower growth or reduced entrepreneurship. Well, let's speak to Panesh, who is a research fellow at the IPPR and joins us live this morning. Thank you very much indeed for joining us. Just talk us through what you find with your research today.
Sure. So we've been looking into, how does capital gains tax actually impact entrepreneurship? And what we found is that entrepreneurs are much more focused on market conditions, access to finance, and wider economic conditions than they are about the capital gains tax rate, which is effectively the amount, a tax on how much you cash out when you sell a business, not how much you pay when you're running a business. So ultimately, we think that capital gains tax is poor value for money if we're trying to encourage entrepreneurship. It basically, at least half of the benefit goes to people who are either passive asset owners or who set up tax shelters as single employees and basically work as contractors in high-value services industries. So we know that the government has over 30 schemes in place already that actually target support to entrepreneurs, things like the Enterprise Investor Scheme, that provides tax breaks to people who invest in startups and also government-backed loss relief as well. So actually having a low rate of capital gains tax is a really poorly targeted way of supporting entrepreneurship. We think the government should actually expand their usage of some of these much more targeted schemes and reform capital gains tax. And by the way, we're not just talking about putting up capital gains tax rates to income tax rates. We think that is one part of a wider package of reforms that are needed. The reform package recommended by the Institute for Fiscal Studies also mentions things like introducing an investment allowance and closing some of the loopholes for capital gains tax in inheritance.
But just on that capital gains tax, though, as far as I know, I've just read today that apparently only 12,000 people pay 2/3 of the total revenue from capital gains tax. Isn't it very unpredictable because that's such a small number of people?
It might be unpredictable for certain types of people, but I mean, the evidence does show that there are several very wealthy people who do regularly take income as capital gains. So overall, the amount of capital gains that have been made in the economy has been skyrocketing over the last 10 years. So I don't think that year-to-year unpredictability means it's a bad tax to raise. I think we're actually sitting on an explosion of wealth that the tax system hasn't really caught up with yet.
OK, well, it's really fascinating in research, and we're going to find out how it plays out, of course, in that budget in less than 2 weeks' time, whether the government will go down that road. Panesh, for now, from the IPPR, thank you very much indeed for joining us. Well, what do potentially the people impacted by this think of it? Delighted to say I'm joined by two millionaires. Nice to be a millionaire, isn't it? Julia Davis is an impact investor for a group called Patriotic Millionaires. And Charlie Mullins, famously, of course, sold Pimlico Plumbers in 2021 and is now based in Marbella, apparently. Charlie, let's start with you. Apparently, these changes, if they do come to capital gains tax, not going to really make that much difference.
They're what, sorry?
They're not really going to make much difference, apparently, according to the IPPR.
Is he joking or something? Of course it would make a lot of difference. They're going to raise it possibly from 20% to double it, possibly 40% or even up to 45%. It makes all the difference in the world. It's commercial suicide, what they're doing. They're just driving people out of the UK. I'm one of them, and there's many others that have left and many others will leave. They're just absolutely, they've obviously got no idea about business, how to increase the revenue. They're doing the complete opposite and making businesses shut down, making people leave the country. They're forcing people out of the country. So that chap who just said it make no difference, I don't know what world he lives in, but he certainly don't live in the business world. Many people are now stopping employing people because of the workers' rights. They're already stopping now, obviously because of the capital gains. Basic tax rate could even go up. The higher tax rate could go up. They're doing everything they can to destroy businesses in the UK.
Okay. Julia, what do you reckon?
Well, I invest in businesses in the UK, and I am in business, and I speak to my founders on a regular basis. In fact, I asked one of my founders yesterday, what did he think about potentially capital gains tax being increased? Would that worry him? And he just laughed. He said that's not something he even thinks about, because he's focused on achieving what he's aiming to do as a business. He's focused on growing the business and getting to profitability. And if he gets to the point where he's, going to sell the business and he's going to make a gain on that, then he would be delighted to contribute back to the country, which has enabled him to grow the business. So don't forget that what businesses need is they need a stable, well invested in country, and that means public investment. So for a very long time there's been significant underinvestment in public services and infrastructure, and that literally means that some systems are crumbling. So our NHS has been struggling for a very, very long time. That means we have workers that are on long-term sick, unable to get back to work. We have a criminal justice system that's really struggling at the moment. I wonder whether or not that's a bigger problem for some of these millionaires, because they're worried about walking around in London now with their Rolexes on their wrist. So everybody actually benefits from a better invested in public services and infrastructure. And I think that's the real problem. And some of these people that are saying they're going to leave the UK, I think you'll find they've already left and they've already moved the money out of the UK. Whereas I'm invested in British businesses.
Let Charlie come back on that point, because he has left the country.
Wants to achieve, which is a transition to clean energy, transition to a circular economy.
Let's have Charlie respond to that.
Julie, I disagree with everything you're saying, right? Loads of people have left, loads of people will leave, and to say from any businessman that it's not an off-putting thing to increase capital gains is absolutely rubbish. I've paid into the system for 55 years. I've paid in over 100 mil, and I'm not prepared to pay in anymore. So I have to be honest with you, I'd like you to get this businessman on the TV and say it makes no difference to him. Of course it makes a difference. Why do you think business run a business? To keep paying everything to the government? People keep saying to me, you're not patriotic. I am patriotic. For 55 years, I've paid into the system. I've employed thousands of people. I've trained loads of youngsters up. I contribute to charity. I get involved with anything to do with helping youngsters into work. And I've got people like you. I'm telling you, Julie, you're wrong. You are wrong.
Julie?
Totally.
Thank you. So I can tell you that people run businesses for a whole range of reasons. So I invest in companies who are addressing many of the solutions that we're facing as a society. So they're actually taking forward the missions of this government to move us towards clean energy transition, energy efficiency, a circular economy. And all of those things create the jobs of the future, because not all jobs are equal and not all businesses are equal. What we need to focus on are jobs which are good for society as a whole, that are creating the jobs which are going to last in the long term, because we are transitioning to clean energy, because it makes sense. It's going to be cheaper. It's going to deliver on tackling fuel poverty. It's going to clean up the air in our cities. And so businesses, as I said, they are run by people for a whole range of people and reason. And I can tell you, I invested in the first company where I got my money from by selling my house. I invested my money in that. I took risks. I could say that I'm a wealth creator, but I would say that most people in the UK are wealth creators. Our employees are wealth creators. Everyone that trains, teaches our kids.
Of course, and Charlie's also a wealth creator.
So invest in those people too.
Yeah, let's see what he has to say.
Yeah. Julie, I'll ask you this question. Are we better off with all the wealth creators in the UK, people that run businesses, people that employ people that invest in the UK, entrepreneurs? Are we better off with them in the UK or out of the UK? It's a straightforward question.
We're best off with people in the UK who believe in the British people and
Okay,
invest in British businesses and are willing to invest in infrastructure and services within the UK. Because this isn't a case of can't, it's a case of won't, don't want to. And there's only two options here, really. We know, everybody knows that we need to invest in better infrastructure and services within the UK, which is going to help people in businesses.
Can I ask you a question?
If we don't get it from people who can afford to do that, what we're saying is people who can't afford have got to pay more.
OK, Charlie, can I ask you a question, which is, you've left the UK. What the Labour government have done, they've brought political stability, which we don't necessarily have had for the last couple of years in the UK. And they say they are pro-business, that they are pro-growth. Growth is at the heart of what they want to do. Why don't you believe them?
Well, because they're clueless. None of them in the cabinet have ever been involved in business. And if you know anything about business, you would not be putting up all the increases, which is going to deter people from going into business. Employers have already stopped employing people because of the workers' rights. Then they're going to stop employing them because of the national insurance hike. Business people will not invest so much in the UK because of the capital gains. People will not work in the UK because the increase in taxes. The way to increase the economy, yes, get people into work, I'm all for that, and that's what we should be concentrating on. But unfortunately, we're driving people out of work. And I mean, me and Julie would never agree on this, and I'm really surprised, Julie, that some of the content, you come away from what we're talking about. Are the government, has the government got it right? Ask probably 90% of people, and they will tell you the government, Labour, it ain't working what they're trying to introduce.
Julia, just finally on this, do you understand that there might be other people like, you might agree with it, but there might be other people like Charlie Mullins who may well vote with their feet on this, who feel the same way, and that is, Charlie Mullins, and that is a risk.
Well, like I said, a lot of the people that are saying that have already moved out of the UK. A lot of those people have already moved their money out of the UK. So who do you listen to? Do you listen to the people who are investing in British businesses, who are saying, we're here, we're staying, we believe in the British people, we know that they have given so much over recent years. And because we can afford to do this, we're happy to stand shoulder to shoulder with the British people and support investment in this country so that our businesses of the future can thrive. That's investing in British jobs. That's investing in the British economy and our British people.
It's not happening, Julie. Look, you can say what you want, you can put it over what you want. Investors have stopped investing in the UK. Investors are moving out of the country. Entrepreneurs are moving out. People that create wealth, people that create jobs. To actually say that they're still doing it and they're better off. So in a short while, we know when the country goes.
If I can just come in on that. So Charlie's talking in the past. He's talking about these people. They've already moved their money. They've already moved out of the UK, as Charlie has himself.
Okay.
So those tax increases that we're talking about, they haven't happened yet. They're not on the agenda. So a lot of these people are saying, we will move if you make taxation fairer.
And they will.
Because that's what we're talking about.
Okay.
You have got to look at fairness with people who work for a living. They are also wealth creators. They are also people that work really, really hard. So we're talking about fairness. So a lot of these people that are now jumping up and down, they've already moved their money, they've already moved out of the UK, and they can afford to make this contribution, whereas a lot of the people
they're clever enough to
in additional investment otherwise.
Julia
really
and Charlie, we could do this all day. In fact, there's hardly any need for me to be here, but we really, really appreciate the time this morning. Clearly very, very different views on this, and we've got the budget in less than 2 weeks' time. We will find out whether capital gains tax is likely to increase and what impact will have. Thank you, Charlie. I'm sure you can carry this offline. Looks very nice there, though, in Marbella. That is Charlie Mullins and Julia Davis there on the issue of capital gains tax. Let's bring you up to date with some of the rest of today's business stories. And the betting giant Entain says that it has had stronger than expected trading in the latest quarter. It's been boosted by Euro 2024 and NFL matches. The Ladbrokes and Coral owner said it had improved its guidance after being boosted by a recovery in its UK and Ireland business, which returned to year-on-year growth sooner than expected. Deliveroo is reporting healthy growth in the UK and Ireland. The takeaway delivery specialist told shareholders it has seen a rise in orders and it has made progress in a more stable but uncertain consumer environment. It said adjusted earnings for the full year are now on track to be in the upper half of its £110 to £130 million range. And the Finnish telecoms equipment supplier Nokia has reported a 9% rise in its operating profit in the third quarter. However, quarterly net sales fell 8%, and it says while it's seen demand in some areas, sales in India were lower, with shares dropping by 3%. And don't forget, you can get the very latest on all those stories and indeed much more on our Money blog. Just scan that QR code that's on your screen right now for more details. Now, Sky News can reveal that several government departments have failed to meet the deadline for a spending settlement ahead of the budget later this month. So Keir Starmer has also received letters from some cabinet ministers expressing concern over the scale of spending cuts that is being demanded by the Treasury. Apparently, let's speak to Liz Bates, our political correspondent, who is live in Westminster for us this morning. Good morning, Liz. Let's start with this issue of apparently departments missing the deadlines. What's that all about?
Yes, Darren, this is our Deputy Political Editor, Sam Coates, who's been taking soundings from people across Westminster and has found that there are some real tensions behind the scenes in the run-up to this budget. There always is. Departments always want more money. The Treasury doesn't want to give away more money, and that is what is going on here. But I think there's an extra pressure and intensity around this budget, the first one of this Labour government. And it does sound like in those negotiations that go on behind the scenes, some of the departments have missed their deadline to agree with the Treasury what they will have to spend in the coming financial year and the next. So I think that shows the level of tension that is going on behind the scenes. As you mentioned as well, another indicator of how difficult these conversations have got is that some cabinet ministers appear to have gone over the head of the Chancellor, Rachel Reeves, to appeal directly to the Prime Minister to say, if we do have to take on the level of cuts that the Chancellor wants us to, this is going to be incredibly difficult politically. And of course, this is going to be a defining budget, not just in terms of spending, but in terms of politics as well. This is a government really struggling, I think, to define itself politically. And this could be a really important moment for that. And so these tensions really do need to be resolved. We've known from the moment that the Chancellor Rachel Reeves stood up in the House of Commons, it was one of the first things she did when she took on that role. She said there was a 22 billion funding gap that she would have to fill, and one of the first things that she did was cut back on the winter fuel payment. That's been very controversial. In the aftermath of that, she has told MPs, these are the types of difficult decisions that we will have to make. Get used to it. She hasn't backed down on that, and it looks like there's much, much more pain to come.
Yeah, really fascinating stuff, and fascinating that, of course, that has all been leaked effectively to the press, a sign, I think, of the turmoil behind the scenes. Liz, as always, thank you very much. Liz Lane there joining us live from Westminster. You're watching Business Live. We're going to take a quick break. Coming up next, it's how the markets are doing. FTSE up a little bit. We'll be looking in detail at that in just a couple of minutes.
We've come to one of Moscow's Cold War bunkers. It was built as a top-secret command centre.
Being here really feels like you're stepping back in time. I'm Ivor Bennett, Sky's Moscow correspondent.
A show of military might and menace.
Courage, bravery and sacrifice will win the day.
It's a new subject. They'll learn about combat drones and some how to handle a Kalashnikov.
The Kremlin continues to put forward its own version of events, both present and past.
There's no mention of the fact that Russia invaded its neighbour. That's rewriting history, isn't it?
Now we have to read it carefully.
Vladimir Putin put forward his plan for a ceasefire in Ukraine, telling Kiev, pull out of your eastern territories and the war will end. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Vladimir Putin is already the Kremlin's longest-serving leader since Stalin. The question is, what will a fifth Putin term mean for Russia and the world?
Why do you support Vladimir Putin, Mr. Segal?
I can't answer questions that stupid.
I've watched Vladimir Putin attempt to create a new world order.
The St. Petersburg Economic Forum was the backdrop to Vladimir Putin's latest verbal volley that Russia could send missiles to other nations to target the West.
Ambassador, I wonder, shall we have a quick word for Sky News?
Is the West right? Are you fueling Russia's war machine?
Swedish media, oh my God, you're not afraid of being here.
American journalist Evan Gershkovich is on trial here, but was first on display.
Russia says Evan Gershkovich was caught red-handed, but has never produced any evidence to back that up. Sky News. Get the full story first.
The most significant day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle.
Why only in America? People want their country to work.
You want to jump in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
If you forgot your pajamas, Emirates has got you covered. Fly Emirates, fly better.
Right, let's have a look at the markets. And Asia traded lower last night following declines on Wall Street. Japan's Nikkei led the losses in the region as investors await more Chinese stimulus measures to prop up the real estate sector there. European markets, though, were doing pretty well, as you can see, all in blue there this morning as traders await the next monetary policy decision from the European Central Bank, which we're expecting later on today when it comes to interest rates. Here in London, the FTSE is also up, trading up around a third of 1%, boosted by yesterday's inflation figures and strong company earnings. And talking about companies, we were talking about N10, weren't we, earlier, and Rentokil. They are doing pretty well, as you can see. They've, particularly Rentokil, is back up, having recently had some losses. It's risen by some 9% on relief that there's no further setbacks for that company. On the downside, however, paper producer Mondi, which has reported a big drop in third quarter profits due to softer demand, higher costs and factory shutdowns for maintenance, as you see, down over 6%. On the Forex, on the currencies, sterling also doing quite well, up just a little against the dollar and the euro. And if we take a look at oil, it's also nudging down just a little this morning at around $74 per barrel. Well, let's bring in George Lagiros. He is the chief economist at Forvis Mazars Group. Very good morning to you, George. Let's talk, first of all, if we can, about the ECB, European Central Bank. We're expecting a decision on interest rates a little later. What are you expecting?
A simple 25 basis points rate cut. The ECB is nowhere near as imaginative as the Fed. It's not prone to surprises. They do need to cut rates because it's also a very unique central bank in the sense that it underpins a political union above it, the Eurozone. So they do need to keep rates lower because they have a problem with France and they have a problem with Italy. But they're not likely to cut abruptly because also, unlike the Fed, they might not want to send an emergency signal.
And we also talked, though, didn't we, in the markets about what's happening in China, the stimulus package. It really has been met with mixed reviews, hasn't it, really, since it was announced just over a week ago, and particular continuing concern about the housing sector.
So for a stimulus package in China to make a difference, you'd probably have to talk in the trillion and not the billion. So that's number one. And that's really what the markets wanted to hear, both local and global markets. But the point is that China does not really want to build up its debt so much. It's projected to go from 57% debt to GDP in 2018 to nearly double that by the end of 2028. But they know that the more debt they accumulate, especially to foreign creditors, the more this undermines their general goal of becoming an Asian superpower. So they have to balance things out. That is why they're willing to risk some economic malaise so that they're not derailed from the general plan.
Let's talk about the other big economy, of course, the United States and its retail sales. They're picking up a bit of pace and a kind of further sign, I think, of the resilience of the US economy.
Well, look, the Biden government has pulled all the stops. It's thrown the kitchen sink into making sure that the economic message ahead of the election is sound. And they're achieving that. You know, growth is good. Liquidity conditions are pretty good. You know, everything is backed by the CHIPS Act and very good fiscal conditions. So, yeah, of course, you expect retail sales to not be very bad. And the market is expecting them to grow by 0.3% month on month. Even if it's not that number, even if it's lower, still the picture in the US is pretty decent, especially after 2 years of high interest rates.
Yeah, but we've got that election coming up. Just very briefly, if you can, George, in the space of just a couple of seconds, talk about when the whole hardware issue, particularly when it comes to tech.
Yeah, so we had the earnings from TSMC. They were very good. Right now, software companies are paying hardware companies and data centers a lot of money to have access to them. We're nowhere near, valuations are frothy, but we're nowhere near the 2000 dot-com bubble. You know, that might come later from the software companies. But the hardware companies are solid.
Okay.
And that's reflected in their earnings.
Thank you very much for your time, as always. That's it from Business Live. I'm back at 4:30. Wilf is up next with the very latest news headlines.